I was late this morning because my computer, it did like a an update overnight, and when I came on the screen it still hadn't finished it, so I had to
Oh
wait
no.
so I had to wait like 10-15 minutes for it to finish what it was doing. Oh. I think the daily time frame is going to continue down to this area here. 138. I think we can continue down to 138. Well, to be honest, I'd rather it just consolidate, because then we'll know what will happen over the weekend. And then we'll get a clearer direction.
Yeah, exactly.
Yeah, these are my levels from the Asian session. So it looks like, yeah, look at that.
Yeah, I mean, it's dropped like 50 pips this 30-minute candle.
Interesting. Yeah, that is interesting. Just from an entry perspective, like, there wasn't really much. Alright, there wasn't really a way of catching this move other than maybe like a break of this 15-minute low to fill the range, but like, that would have been just super risky, like.
Yeah.
Yeah, I'm not really sure how could have caught the move, but hey. Yeah, we'll have to, very difficult. Okay. Morning, everyone. Sorry I'm late. I just was explaining my computer had to do an update and hadn't finished by the time I got here in the morning, so had to wait a little bit. Had to exercise that patience. Very important. Let's see what Euro NZD done this morning. Yeah, that would have been a super nice sell right over here to continue down. That was a really nice sell this morning, 7 a.m. So Euro NZD broke out of resistance. Price came up, the next candle came down, closed back in the range. Next one did a retest. We had a weak bullish candle close. Next one broke the low and continued down to fill the range. Because if we measured this range, this was like a 30 pip range. So yeah, that would have been a really nice sell there. Could have kept stops above this area here and 10 pips and boom. I have to admit, like, I do like Euro NZD as a pair. Well, so far anyway, from what I've seen of it. Makes sense to me, you know. Anyway, I need to delete a couple of these because we have reached 1K. Remove. Yep, remove. Alright. Let's wait for a few more people to join and then I'm gonna get our guest on today. Okay. Alright, we'll give it 5-10 more minutes and then we're gonna get our guest on the stream here today. So we just gotta wait for a few more people to join. Looks like gold could continue now. Alright, let's come back to GJ. Let's do some fresh analysis here on gold. So looking at the daily time frame on gold, because the previous daily candle closed below the support over here, I think gold can continue moving down and, you know, potentially fill these wicks over here around 1825. So look on the 4-hour time frame. Morning. Sorry I'm late, guys. Had a computer update. Didn't want to update overnight. Yeah, morning. So looking at gold on the 4-hour, we had a resistance up over here. Price came up. We spoke about this yesterday. Corrected this move. Came in the range. And then we tried to break out of this range again. But closed. But closed back in the range over here. So we can see the 4-hour time frame just ranging because we're in a consolidation area here. Let's look on the 1-hour. Yeah, 1-hour time frames also just kind of consolidating over here. 30-minute. Yeah, so looking on the 30-minute, we'll also have, you know, a couple of smaller ranges within this area. So we do have like a minor support over here. We have an area down over here like a target. If we break this minor support, we can, you know, fill this range over here. It's like 30 pips. Right. And we also have a resistance. Probably up over here is going to be the best bet because this is kind of the area where after this resistance we have clean candles. So that's what we're going to focus on. Probably even going to bring this up. Yeah. Probably going to bring this up because this resistance kind of tapped into this area here too, to the left hand side. So okay, so yeah, we're just in this range right now. Then we have another support down over here if gold breaks further down. Just look on the 15-minute time frame real quick. Yeah, so we've got some consolidation here too. So gold is just ranging. I'd even actually go to say, you know, we've got probably like a zone here too, because this was a previous support throughout the Asian session, and then we broke down. So I think if we close back above 1837, we can continue on. I think that's going to be more realistic over there. But then we have like another resistance here. So yeah, it's probably just like another range really. Then if we break out the other way, we can continue up. So yeah, we just have to see at this point if GJ can like make some resistance or... Wow, it's a little bit of waiting involved. Looking at GBP CAD, look on the daily time frame. So GCAD's coming down also, same as GJ. We're at our support right now, but it seems like the previous daily candle closed below that support. So I think GCAD can continue down to this next area over here. Let's look at the 4-hour. Yeah, looking on the 4-hour time frame. Obviously, we need to focus more in on the most recent price action, but we have a resistance right up here, and it seems like we're trying to break below this 4-hour support to continue down. So that does seem like it's on its way to do so. Let's look at the 1-hour time frame. Looking on the 1-hour time frame, let's just remove this real quick. We have a support over here, and we had a resistance up over here. So it does seem like, this candle came down, closed below this area. So like a break and retest kind of. So this 1 hour candle, needs to respect this high and then continue down, because we have a support over here for price to continue down. I think on the 30-minute. So the 30-minute time frame, we had a support over here. Now prices came down, closed below. We have like a minor support here too. So probably going to want to see if we can create some resistance. It's probably going to be the best option here for GCAD to continue down. Yeah, because there's a lot of mess, so we want to see like a resistance for price to continue down. Look at Euro JPY. Let's do some fresh analysis here on Euro JPY. So looking at the daily time frame, I know probably Sharma's going to talk about Euro JPY, but just going to break it down from a technical perspective here. So Euro JPY has created a resistance up over here around 126.300. Sorry, 126.500. Does seem like this current daily candle is rejecting this area. So if price is going to come down, maybe it's going to come back down to support, but just kind of ranging right now. Let's look on the 4 hour time frame. Yeah, so 4 hour came up, retested this high over here, but failed to break above, and then we tried to create like a support right over here, thinking that if we create support, it could break this resistance to continue up, and this 4 hour candle was just broken the previous 4 hour candle low to continue down, which was a weak 4 hour candle. Now let's look on the 1 hour. On the 1 hour time frame, we had, probably gonna say we had like a support over here. Price did a fake out, and then we've broken out of this zone now. Let's look on the 30-minute. Yeah, but I think for this particular example, we're just going to look at this whole area as a zone, because on the 30-minute, this is a whole consolidation area, and below the support, we have clean candles. We can even bring this up now. So it does look like, because the 30-minute candle has closed below this area here, that if the next 30-minute candle can break the low of the previous 30-minute candle, we can continue down. We have a clean range for like 22 pips. I think that's something that can work out. Let's look on the 15-minute. Yeah, so 15-minute candles also closing below this area. It's probably going to need to make a resistance, because, price has kind of dropped like what? 30 pips already. So maybe it's going to make a resistance, but we're not really sure yet at this point. We're not really sure yet. So we'll obviously need to wait a little bit longer here. Yeah, morning everyone. Sorry I was a bit late. Like I say, just had a little bit of computer troubles. Did an update overnight, and it was supposed to be done by the time I woke up, and it was had about 15 minutes left. So okay, so we'll come back to Euro JPY, but I think EJ should continue down. FTSE's just kind of ranging in this big consolidation, but essentially, looks like we created even support above this previous high to continue up 4 hour. Price made a high over here. It's now retracing. We have a support down over here. Let's look at the 1 hour. Yeah, it gets a little bit messy at this point. Yeah, it's very messy. Yeah, probably gonna come back to that. Okay, right. Okay, we've got a few people here now. Let's get our guest in here today. think GBP JPY can continue down to 138 and then continue further down to like 137, 700. Yeah. I think that's gonna be. Okay. So yeah, I think at this point, GJ just needs to make a lower low since the Asian session, and just have to see. But I'm not trading here today, just gonna watch. Gold. It seems like gold's trying to come back above this area. It's another 15 minute. Yeah. Have to wait here for gold, GCAD. So you'll have to create some like resistance or something on the smaller time frames. Same with EJ, I suppose. I think a resistance is going to be better. Ooh, GJ is coming down. Yeah, it's got like another 10 pips to 138. I think it should continue down to 138.
Hello.
Morning. How's it going?
I'm good. Can you hear me okay?
Yeah. I can hear you perfect.
Perfect.
Yeah, nice. So,
I
yeah,
actually just got into this trade when the candle flipped.
what, on GJ?
Yeah.
Oh,
yeah.
nice.
Yeah.
What, on the 15-minute time frame?
Yeah, I was on the 15 and I'm currently going for that it's about 3-to-1 risk to reward, so 3.17, coming down to 137,900. Oh, it's about to hit TP.
Oh, nice. That's
Yeah.
So do you get in based off the current candle, like keep your stop loss above the current candle?
Yeah, so my stop loss, as soon as this 15-minute candle flipped after making that huge top wick, that's when I moved my stop loss a little bit lower. But first, the or the stop loss was at about 2-to-1 risk to reward.
Nice.
And then when this 15-minute flipped, that's when I took that 3-to-1 and lowered it.
Nice. Yeah, see, I kind of expected GJ to continue down. I mean, especially because in the Asian session, we were breaking below 138,400, and once we were breaking below 138,400, we could retest some of these lower levels, and so I was kind of expecting that. But then when I came to the charts this morning, it kind of didn't really give me much confirmation, because the way I trade is I will wait for like a candle to come down, break support, close below, and so yeah, got pretty tough for an entry. Or I was looking at the fact that the 4-hour candle closed like a weak 4-hour, so if we broke the low of this 4-hour candle, we could continue down with momentum. But yeah, looks like I missed the move.
This 138 area actually in general is it's a daily support, a daily and a 4-hour support.
Yeah.
And so the way I took this entry was the break and retest on the 4-hour, of course, as soon as the candle flipped and continued down. But also I was targeting that 138 area and then now that this price has pretty much hit it, I'm going to be trailing my stop loss below my entry, and then looking for some partials, and just waiting for price to hit TP at this point.
Yeah, nice. Yeah, I think on the weekly time frame as well, we've come back to that area. This is a strong area from the weekly time frame. Like 138, 137, 900, kind of that whole vicinity. But yeah, anyway, I'll let you introduce yourself, and you can tell the people here a little bit about what you do. And but yeah, I'll leave it up. I'll leave it to you. Oh, can you hear me all right? Sounds like you're in a bit of water over there. Oh, that sounds
He's drowning.
drowning, yeah. I don't know if you can hear me or not. Morning. I think she's having some mic problems. Yeah, we'll give her a sec. So yeah, GJ is on its way down. See if it can continue down to 137, 700. It's gonna be the next target over there. Does that mean GCAD continue down? Oh yeah, GCAD, same thing. Didn't even create like a resistance at all. Just retest and drop. Look at EJ. Oh yeah, nice. See this right over here would have been a perfect sell when you're a JPY.
All right, can you hear me okay now?
Yeah, I can hear you now.
Yeah, perfect.
Yeah, so I was just saying, you can if you want to introduce yourself, tell people kind of what you do. And
yeah, definitely. So my name is Sharma. I go by Sharma FX on Instagram. And the way that I trade here is taking a holistic approach to the financial markets. I look at all three styles of trading and I put them together, and that's pretty much what my overall technique is, where I look at the fundamental analysis. I look at the fundamentals of a currency, of a pair, of the economy. I look at the technical, the way that these pairs are setting up, and I put them together to understand what's the market sentiment. And that's pretty much what I do. That's what I teach. That's what I use to trade here. And I'm here pretty much to talk about fundamentals. If you guys have any questions or anything like that, you can go ahead and just put that in the chat, whether it's YouTube or it's Zoom, and I'll be more than happy to answer those. And so, are we trading mainly GBP JPY here or Euro JPY?
So kind of like the main focus is always going to be GBP JPY, but a few of these other pairs I just kind of look at for a couple for like, and just to kind of have like other pairs to watch. So the FTSE at the moment, I'm just kind of in that stage of just watching at the moment. Euro JPY I've traded for a long time, but kind of only really maybe take like 1 or 2 entries a month when something nice presents. GJ is my main pair, like that's the pair that I trade like throughout the week. And then gold is like, again, just a very rare, maybe once or twice a month, if something nice, really nice presents, something that really makes sense, because gold can get a little bit tricky with the technicals and stuff, so it has to be something. But yeah, I kind of really just focus on GBP JPY. So I don't know, maybe you want to start with GJ with some fundamentals and
yeah, definitely. Yeah, so let's start off with UK's fundamentals first of all. They are the ones that are really driving this pair currently. So as we all know that there's, with the UK and the EU, there's Brexit going on. So that's one of the major things. And also today, before the London session opened up, and I think that's why we're getting such a bearish momentum here with GBP and even Euro, is because before London opened up around Asian time, there was news where Boris Johnson, Boris Johnson said, to get ready for a no Brexit deal, because on Wednesday, the EU president, along with Boris Johnson, they met up. It was in hopes of trying to get a deal done. But when Boris Johnson walked out of the talks, he made a statement that both parties could not come to an agreement. he also made a statement specifically saying that whatever the EU was asking for, that those demands no UK Prime Minister would accept at all. And so there was a lot of bearish sentiment into the market where, you know, the differences remain. Again, the main three components or the three issues here are fisheries. There's governance of how will they enforce all these laws after the Brexit, post-Brexit, so after December 31st. And the third thing is level playing field. And so basically talking about how will business be done between both parties at that point. So there's still a lot of differences remaining. And then there was also, we saw a little bit of accusations going back and forth where the UK was saying, the UK part of negotiators, they were saying that the EU is coming up with some new demands, and the EU saying that they're not coming up with new demands. It's whatever they have been asking for already. So there was a lot of back and forth going on. There was the EU summit today, and they were hoping to get some kind of a deal done. And the EU side was looking at these EU summits, which is yesterday and today. They're looking at it as a natural deadline for these talks. So they were hoping to get some kind of a deal done before the EU summit started, just so they're able to just completely just sign it off. But when the news came out that there's no deal done, and then Boris Johnson at first was saying, you know, be optimistic, there may be a deal done, but today he said there's not going to be a deal done. Now the EU summit, everyone who's sitting in the EU summit is saying there's no point, it's our national deadline. We're not even going to be considering Brexit talks in this EU summit currently. And in order to kind of compensate for all this market fear from the Brexit talks between the UK and the EU, we're seeing a lot of deals that UK is doing. So this week, we saw Canada and UK, they finally signed a trade deal, which won't be going into effect until after December 31st. So January 1st is when they're looking to finally make it official, but they have signed it and everything will go into place post-Brexit. And then they also, UK and Singapore signed a post-Brexit deal today as well. And then there was also UK and Japan. So we're seeing UK signing all these trade deals with different countries in hopes of compensating or even increasing some chances of surviving in this COVID-related or COVID-impacted economy. So far, the biggest things that we have been seeing is, again, just the market fear from Brexit, because, again, if both parties do not come to an agreement, it's going to be a major hit to both of their economies, and both of the parties know that. And what the UK now is doing with all these trade deals is also just trying to find some kind of a way to save the economy so it doesn't completely just drop down and shrink as an economy overall.
Yeah, I mean, it seems like these Brexit negotiations, right, they've been going on for what, 4 years, like, overall, since, you know, we voted to leave. And
Right.
It just seems crazy how, you know, they want to try and cram these negotiations, you know, pretty much to like a last minute, you know, is it a deal or no deal? Like, you would have thought, you know, with preparation that, you know, over the amount of time that they've had, they would have like come to an agreement for the sake of, you know, both economies, and, you know, because what's really at stake with these deals is, you know, businesses and, you know, how the two do their operations. And so it's kind of crazy to me how they like have taken, you know, literally left it to the deadline. But, like, you know, I've been reading a lot about what the EU have been asking for, like, with the fisheries and stuff. And, you know, it's like their original demand was that they wanted to, like, keep, like, a very high proportion of the fish that, obviously, in the UK waters. And then I remember at the time that our media were, you know, saying, oh, the EU are willing to compromise with us. It's now time for us to, you know, meet them halfway. But actually, they were asking for, like, that we get to keep only 18, or I think it was like 20% of our own fish. So it's pretty crazy. But personally, I think because of that situation, and obviously probably another couple of other things that I may not know about, I personally think that the UK is gonna leave with a no deal, just because like Boris probably won't want to see it that the fish or the fishermen are the sacrifice to get a deal with the EU. You know, I don't think he would maybe potentially do that, but I don't know at this point. I have to just suppose see.
Yeah, so yeah, with the EU, what they're trying to do is they're trying to keep the same exact access that they have to the UK waters currently. And in return, what they're willing to do is still give the UK access to the EU markets. And what the EU is saying is that you can't limit our access to your waters if you want access to our markets. And so that's what they're basically trying to trade off here. But again, it's between both parties. They're both saying, really, if you look at it from an economical perspective, fisheries doesn't even make up a huge proportion of either of their economies. It's really just a political pawn that they're both using in these talks. And, you know, you could read up, it's pretty much in every Brexit update that you're going to look up. It's all there. It says in every single one of them that fisheries does not even make up a huge proportion of either of their economies. In fact, a lot of the fish that's caught in the UK by the UK fishermen, 80% of that is actually sold in the EU market. Yeah. And so, yeah, so that's pretty much what we're seeing. I personally think that even if they're not able to get a deal done by December 31st, then I do think they're going to look at the major hit that the economy is going to take, both of their economies, specifically the UK. I think it's going to take a bigger hit, but they're going to take a look at that. They're going to come back to the table and they're going to want to talk out a deal. Definitely.
Yeah. See, the other question maybe you could answer, because I've been wondering this for a while, was obviously with all the lockdowns and restrictions that we've seen obviously over the past year now, you know, when the initial like coronavirus came in and, you know, GBP took a hit and a lot of pairs, you know, went pretty bearish. But later on in the year, you know, when governments were announcing, you know, like a second lockdown and things like that, I was kind of expecting GBP to, you know, go down again, because considering, you know, when you lock up an economy, right, you know, you're basically cutting off the stimulation of the economy. So I was really curious to why, you know, at that time GBP was actually going bullish. You know, maybe you could.
Even with the lockdown, while there's a lockdown going on, if you go back and you take a look at the Bank of England's monetary policy statements and all that, they were introducing a lot of its pandemic emergency packages. They were offering a lot of those supports for businesses, for individuals, even for people who were working only 80% of what they would have worked otherwise. The government was still willing to pay them. And they were willing to pay them for the new skills that they would have acquired, which was off the job. And they were paying 80% of whatever time that they would have been working otherwise. So there was still a lot of government assistance or central bank assistance that was inflating. And there were also the mortgage-backed securities. And, you know, we're seeing a lot of that in the dollar as well, even with the lockdown. So there's a lot of these programs that they will put out. They will start increasing some of their repo liquidations programs and all this stuff. Pretty much what they're doing with these monetary policy statements and increasing or extending their programs, they're just putting money back into the economy. They're inflating the economy. They're inflating their currency just so it doesn't dump. Exactly what you said. When you lock down the economies, usually that means the economy is weak. The businesses, they're not making money. People really aren't going out shopping as much as they would have, going out to restaurants and stuff like that. And so what they do instead is they inflate this currency. They put out so much money into the economy through these different programs that you're going to start seeing this bullish movement. But again, from a technical perspective, you could do this as much as you want from a fundamental perspective. From a technical perspective, when you're inflating a currency, when you're seeing huge bullish moves up or bearish moves down, price will always correct itself. And that's what we've seen doing. And that's what we're seeing happening right now as well.
So you're saying basically because they're inflating the economy, it's only having such an impact that it's moving, you know, the market in, let's say, bullish. But then because of the reality that actually, you know, things aren't that positive, it's kind of correcting itself from like maybe like an investor's perspective. Is that what
Right. You could inflate the economy as much as you want, but if you don't have the consumer sentiment to support it, you're not really, it's not going to do much.
Yeah.
Because the core of any economy is the consumer itself. The consumer does not go out to spend money, then that means the services industry isn't making money. One of my favorite examples is one of the bigger shopping centers here is Walmart. I'm not sure what it would be in the UK, but here for Walmart, if a consumer doesn't go out to spend money in Walmart, Walmart doesn't make money. If Walmart doesn't make money, then they have inventories that's just sitting on their shelves. And so that means they're not putting out more orders to the manufacturing industry either, to the wholesalers or who would be supplying them and manufacturing stuff for them, right? And if they're not doing that, then first of all, when Walmart doesn't make money, then they need to start looking at, okay, what are some costs that we can get rid of? So then it doesn't start eating out like the rest of our finances, right? And so what's the first thing that they're going to let go of? Electricity is a fixed cost. Land rent is a fixed cost. So they're going to go after variable costs. The variable cost, the first one tends to be employees. They tend to let go of employees. And so that's where your cycle of unemployment starts. When they start doing that and they don't give out orders to manufacturing industries or the manufacturing sector, to the wholesalers or anything like that, they're doing the same exact thing. They're looking at, okay, we're not getting orders from our clients who are, the services industry. If we're not getting order from them and we're not making money, then how can we reduce our cost? Again, electricity, machinery, all that stuff is fixed cost. How do you get rid of variable costs? Which is the first variable cost? Employees, once again.
Yeah,
right.
See, that makes
and how
sense.
did this entire cycle start? It started from the consumer not going into a store and spending money.
Yeah. See, that's probably why, like over here, with all the lockdowns and stuff, I think the real effects of that haven't even been realized yet, because, despite, I think the markets have been too focused. Just from what I can see, I mean, I'm not a fundamental trader, but from what I can see, it seems to be, they're more focused on vaccine and things like that. But once the realization comes into play that, the restrictions and what that's really done, like what you were saying with the example of, what's the first thing that happens when, businesses are not having or not getting a revenue, is they let staff go, they make them redundant. And all I was hearing during the lockdowns and stuff was companies just saying, right now we're letting this amount of staff go, and then another company was letting this amount of staff go. And at the end of the day, when we have such a surplus of or high unemployment rate, this is also tax revenue, and the government obviously, our UK and our Bank of England, they've borrowed a lot of money to stimulate the economy and try and react to the coronavirus. But at the end of the day, like, if businesses are going under, if people are now more unemployment, this is the people, the workers, they pay more tax than most. Collectively, they pay more tax than corporations. So without corporations, you don't have employees, and without employees, you don't have, a surplus of tax revenue. So, I think it's going to start to slowly have its impacts once a little bit of normalization comes into play. And, when people actually realize, like, okay, now we have the vaccine, we can get back to normal, but look what the damage has been done. And that's probably when it's going to be truly realized, because that's what I was saying was with the first, the second lockdown and during the first lockdown, we would have really thought that because of these restrictions and with the amount of businesses that we hear in that are going into liquidation and things like that, that it would have been realized, but it hasn't. So I feel like it's going to come sooner, once maybe everything's settled down and once the kind of vaccine gets sorted out. Probably at that point, the impacts are going to be truly realized as well.
Absolutely. Yeah. And so even with the vaccine, we're seeing a lot of that vaccine optimism, where people are just pretty much waiting. Again, UK is one of the first Western countries in order to who have rolled out a vaccine, who have authorized it. The US still was in the works. This week is when they had the FDA approval. The EU still hasn't done it. They haven't rolled it out completely yet. So the UK is one of the first countries to do it, and that's the vaccine optimism that the market needed for the pound, especially. So exactly what you said, that once the vaccine is out, people are able to become a little bit more optimistic. Again, for that, I would allow at least 2 to 3 months of data in order to get like the full complete picture of whether or not these vaccines are actually working and whether or not people are becoming more optimistic about these vaccines. So I would allow 2 to 3 months for that. But once people are becoming a little bit more optimistic about these vaccines, that's when you're going to start seeing them going out, and they're like, okay, well, I feel more comfortable, I feel more safe going out now, going out for shopping, going out for restaurants, going out for whatever it may be. And that's when the consumer itself, they start feeling comfortable with stuff like that. That's when you're going to start seeing a little bit of more economic stability coming in, quote. That's when you're going to start seeing the central bank finally saying that, okay, well, the consumer is out spending money. Where whatever pretty much program that we have put out, injecting the money into the economy again, it was just to promote some consumer spending. It's working. Now we can slowly start retracting all these programs that we have introduced. And that's where you go from the expansionary monetary policy statements and the expansionary policies overall back into contractionary, and then you're back into eventually raising the interest rates because now your economy is healthy. Like the way that I think about it, and I tell people to think about it, especially if you're just a technical trader and you're trying to get into fundamentals, is think about if you're in a complete downtrend, you haven't even hit the support, would you really look to buy that currency? Not really, right? Because price is just in a continuous downtrend. So it's the same exact thing with fundamentals. If you keep getting the same exact weak fundamentals, where are you getting that confirmation of, okay, well, now price is going to go bullish? It's not going to go bullish because there's so many weak fundamentals.
Yeah.
In order to get that strong support, in order to look for that buy, you look for those 1 hour, 2 hour time frames to make a support and then continue back up. When you translate that over to fundamentals, what you're looking for is 2 to 3 weeks or even month or 2 months worth of strong fundamentals back to back to back. And that's usually what these lower impact news are going to tell you. These PMIs, this consumer confidence, the inflation expectations, services industry, whatever, services PMI, manufacturing PMI, that's what these lower impact news are going to tell you. How is the economy overall doing? And that's exactly what the central banks use in order to determine whether or not they need to continue these programs, they need to extend these programs, do they need to introduce some more programs, or are they ready to pull back and retract some of these programs here?
Yeah, see, I've always, kind of the way I learned it was, when a central bank like reduces the interest rate, it's kind of like a signal, that they need to stimulate the economy more. So obviously we know that the Bank of England's current rate is like 0.1%, and so obviously when they decide to increase that's kind of like the first sign of a recovery in a sense, wouldn't you say?
Right. Yeah, so when they start decreasing this interest rates, that's pretty much what they're doing. That would help encourage consumers to go out and, if there's a low interest rate, you're going to see people going out and purchasing homes. You're going to see them going out and purchasing cars. Whatever it is, they're going to go out and kind of purchase these more of what's called durable goods. And that's what they're promoting with low interest rates. Once you start getting those a little bit of stronger fundamentals, that's when you start seeing them increase the interest rates again. But again, exactly what you said, low interest rates, introducing these expansionary policies, it's all merely to encourage this consumer spending.
Did you, I was just going to say, sorry to interrupt you, but did you leave a runner on GJ? Because it's just, it's continuing down at this point. It's now hit 137,500.
No, I just let it hit TP, but I'm seeing it drop down.
Yeah. So maybe you could talk us through like how you would look at GJ on like from a technical perspective, maybe how you would align, like your fundamental ideas. And so obviously I can clear all of this, and you can, because I'm not trading today, I'm not taking any trades today, so you're more than welcome to annotate.
I'm gonna actually, yeah, definitely. So I'm actually gonna go ahead and start off with the monthly first.
Okay, yeah, sure. I'll change the time frame for you. Just tell me when you want me to.
Okay, yeah. So let's start off with the monthly, and then can I annotate? Is that okay?
Yeah, of course.
All right, perfect. All right, so the first thing that I look at is, again, those major support and resistance levels, and then I start to narrow down my zones. So the first thing that I'm looking at is there's a major support level that's being formed down here, right? That price respected, is pushing back up, and now I'm looking at, okay, what was another support that was being formed? So overall, if you just look at it from a general perspective, you see that price is in an uptrend, right? And then you're looking at, okay, well, price created a support here, continue back up. You see a little bit of a consolidation kind of forming here by these candles. And then the next candle where price made a support was respecting this resistance that was made by this consolidation. Price is pushing back up. And now we're taking a look at, okay, what is price currently rejecting? So if you just pull pretty much this level across, you're going to see that even on the monthly time frame, this level of 140 or 139,900, whichever one that you want to really count, is a very strong resistance level. Price made a support here, right? And it's been respected as support several times. Same exact thing where this wick came fairly close to it, rejected. Same exact thing where price closed. There's a major wick that came all the way down here, but then closed right above. The candle went right back up and it closed bullish above this level. And then if you take a look, you have that fake out, and currently price is failing to break above this level. So this is a very significant level. If price breaks above that, then what's a similar level that we see? It's right here, right? Where price made that support at these candles here, and then same exact thing, price made a support at this level here again, same exact thing, support, and then you have support being formed here, and then this quick little fake out, and then this arrow right here, which was showing the first fake out, is actually rejecting this resistance up top. So we need that 140 close, above close, in order to come back up to this level up here and then continue bullish. But what this tells me currently is price, there's a very high chance, looking at the current fundamentals that we have, that price is simply just going to come back into this area, reject, and then continue back up. So looking at the fundamentals that kind of help me understand this is UK is working on, again, trade deals with so many different countries. So currently, of course, we have them working with the EU, but then we also have the Singapore confirmation. We also had the Canada confirmation. We also had Japan confirmation. And now the UK is also trying to, quote, Bidenize their deal with the US. So first they had a deal that was pretty much set. The terms were set. The legal aspects of it were set for Trump if Trump wins. But now that Trump has lost, then now they're trying to use the same exact deal, but they're trying to, quote, Bidenize it according to Joe Biden. So I do think that price is simply just dropping back down to this level to test this area because of, again, no Brexit deal, which is very major given that EU and the UK are each other's #1 trading partner. So of course that's going to make an impact, but I do think that price is going to come back and just tap into this area and continue back up. We are in that bullish trend. The only thing that's going to break this trend is if price breaks below this consolidation area here again and then comes back down to this major support that's been formed.
Do you think that if we do come out with a no deal that we would, because the way that I kind of view this structure based off the, like, if I were to look at it from just a, like, in my head and think, okay, well, what would I see from like a fundamentals perspective? I would just say that, okay, so since when we had like the Brexit announcement, and we had some fundamentals that during the pandemic, we came to retest these low areas down over here. Now,
right.
I would see it as like, because we're in this like structure. So would you say that because since 2016, which is, this whole area, that because we've been in this formation, that it's kind of prices maybe waiting to see finally whether we will get, a deal or no deal? And would you say that if it's a no deal that we could retest some of these, low points, but if we do get a deal that we could actually break this structure, and then, like you were saying, kind of respect this, maybe this shorter term bullish structure? Would you say that that's a potential?
Yeah, so even to, like you said, to break that structure, we need to break above 140 area. To continue back down and break this short-term bullish, again, price needs to break below this consolidation area that we have right here. So So that would be the break of or a continuation of the bearish structure down. But if price again breaks out of this zone overall, this trend overall, it needs to break that 140 area. So if there is no deal from a fundamental perspective, let's say there's no deal, plus you have that market fear of, okay, we gave out the vaccines, but we're not getting the amazing data that we were expecting. That's another major thing. So if you get that kind of news, or even that the restrictions haven't really been lifted even after the vaccines have been rolled out, you're going to see, for example, some areas in the UK are under lockdown still, or under the 3-tier system that they have going on. If you still see that kind of restrictions around COVID, then definitely price will come back down to test those areas. But let's say there is a deal and vaccine has been great, they're rolling it out into other areas, they're opening it up to even a larger population, that's when you're going to see this break of structure and then continuation back up. And again, you're pretty much just targeting the next levels here.
Cool. Should I move on to what time frame do you next use?
Yeah, and then I go down to the weekly, and then at this point all I'm doing is just confirming that, okay, price, what level is price rejecting? Is it the overall bullish? Is it overall bearish? Is price getting ready to break any kind of a structure? So again, we are in that bullish structure so far. We are getting ready to come back into those areas here again, extending this over. So we are getting ready, and now I'm looking at, okay, exactly what level needs to be broken in order for price to break this overall structure and continue down. For me, it's a break of this level. Once this level is broken, then price is going to continue down. Price made a support here previously. You take a look to the left. My line is kind of diagonal here, but if you do a straight line, then you're going to see that it was also the resistance right around that level. And then same exact thing where price kind of created that resistance before this huge push back up, comes back down, and then you see a fake out right into the zone. So once price breaks below this area here, I think it will continue back down, and we may potentially come back down to kind of test these levels here. And then if price continues up, then again, we're just waiting for price to break this level, and then you're coming back up to here.
Yeah, exactly what I would say based on the weekly time frame.
Right. And then now to the daily.
Sure.
And so even on the daily, pretty much we have the confirmation, of course, for those sells. We have that resistance being formed here. We have price coming down to exactly this strong support level where price made a support previously. We also saw consolidation right at this level. I think this was for about a week almost that price consolidated here. And then again, you have a strong resistance level being formed here, and then support as well. And if you just extend it over, then pretty much you have a consolidation right above this zone. So if price breaks below that, then we know that it's coming down to this area here, this zone here, right? Because you have this very clean candle that's coming all the way down, and then you have pretty much partial levels that you could be looking for. And so looking at from monthly down to weekly down to daily, we are still rejecting that major level of 140, and now we're just looking, okay, what are some levels that we can zone in on, where eventually the goal becomes from swing trading or even day trading, how can you turn that position into something that will run longer into a position trade? And so that's why I look at the monthly and the weekly, and then I come down to the daily 4-hour, because now I'm just narrowing down on my zones. I'm trying to understand what is price doing on lower time frames in order to build up that higher time frame, and how can I let my position run for a longer time.
Sounds good. Is it the 4-hour next?
Yeah, 4-hour.
Cool. I'll try and zoom out a little bit more.
Yeah, so even on the, that's perfect. And so even on the 4-hour, you have this huge support zone that price just broke out of. We're coming back down. It seems to pretty much tap into these areas. And then if you just extend the same exact line over to the left, then you have this entire zone. So once price breaks that, I think we have very clean traffic just coming back down into tapping into this area here, which is again support in the past. That was a bad line. Let me draw that again.
That's all right.
But yeah, you're tapping into this area where price made a support, and then you have consolidation being formed right at the level. Huge, massive rejection by these wicks, and then finally this was the candle that brought in the vaccine optimism a couple of weeks ago, and then price pretty much just shot up here again. It was merely the news. I don't even think the vaccines weren't even rolled out at that time. It was just the news at that point. And now I think we're coming back down to tap into these levels here again.
Yeah, especially if over the weekend, because I know that they were saying that they want to try and either have a deal or a no deal by Sunday is what I was hearing, because they've kind of like extended the negotiation period. So if over the weekend that they say that there's like a no deal or something like that, do you think then come Monday, Tuesday, we're going to see that further downside?
Definitely. So I think even on Sunday, if they say that, there's no deal, then I think the Monday market open, first of all, you're going to have that entire volatility from the market close the entire weekend, plus this negative market sentiment that's going to come in with the negative fundamentals of no deals. I definitely do think that not just the 4-hour, I think price will continue down and break past those minor daily support levels that we just talked about.
Cool. What time frame now do you use?
And I usually do 2-hour, but we can do 1 hour.
Sure.
Yeah.
Cool.
And so even on the 1 hour,
it's still dropping right now.
So even on the 1 hour, you have this is pretty good right here.
Okay.
So even on the 1 hour, looking at this entire area here. So again, a strong resistance in the past, support, and then you have a little bit of a price action happening right at this level with a fake out continuation back up. Usually when price breaks past such a strong level, you're going to see it come back up to retrace it and then continue back up at least 50%. So what I would be looking for here, maybe come New York session, pre-New York or even New York open, I would want to see price come right back and tap into this area, reject this zone, and then continue back down. The reason because is the level that price just completely broke out of. You saw consolidation in the past. Consolidation is just liquidity generation. And so when price comes back and taps into this area, and whether it's a wick or whether it's a candle close, whatever it may be, and continues back down, we're going to have a lot more volume just to continue down on those higher time frames like the daily and the weekly even.
Yeah.
And then next would just be the 30-minute if we were looking for scalping opportunities. But again, just keeping in mind that we did break below a very strong 4-hour and even the hourly support level. And so now you want to be very careful to see where is the next target level. This is pretty much where I become a little bit more conservative with my trades, because I'm looking to the left. I'm trying to see what are some minor levels that price is approaching eventually. And then where can I see price reacting off of again?
Yeah. Do you want it a little bit more zoomed out? Or you're right with it?
I think at this point, I think price is pretty much coming down to those 4-hour levels. So I do think price is pretty much coming down here. And then I want to see like a bullish close here, either on the 30-minute or on the 1 hour, and then continue back down.
Nice.
And so that's pretty much what the thought process is, just putting all the fundamentals together. For price to break a bear structure, what kind of fundamentals do I need to see for price to come into a bullish structure? What kind of fundamentals do I need to see, and stuff like that. So that's pretty much how I'm putting it together. And then again, the fundamentals will give you the market sentiment, and the technicals will show you that market sentiment fundamental in a visual perspective.
So you see this drop over here because, on a Friday, like, it's very rare to see price just completely tank without, one bullish candle. Like, this has already moved like 130 pips. So what would have been your like the reason for you to say, okay, well, I know that because of this fundamental reason, now GBP should continue down? Like, what would that be?
It's the news that Boris Johnson said there is going to be no deal.
Right. Okay. So that's like pushing that more fear into the market, right?
Right. And so the thing is that this entire time, even though he was saying that there's a possibility of no deal, he was also along the lines right after he would follow it up with still be optimistic. Right. And now that the EU summit has happened, or it is still going on. It's the last day. Even though that's going on, and the EU side of these talks, they said that the EU summit is the natural deadline for us. There's no point of us to continue these talks after the EU deadline or the EU summit, right? So we have pretty much passed that, and then now we're seeing Boris Johnson come out with the news saying that there's a significant amount of differences, and we need to get ready for a no deal. There's a very strong possibility. Now he's not saying anymore, be optimistic, there may be a deal.
Okay.
Be optimistic, there's still a chance.
Okay.
Now he's just saying there's a very strong possibility of no deal.
Okay, so had it been the flip side, and we were in this bearish market structure right now. So let's zone in a little bit, and let's say, for example, Boris Johnson came out with that he is optimistic that the EU and the UK could reach a deal by the end of the week. How would you have potentially like look to trade that?
I would go on the 4-hour and I would look at I think it's the 138.900 or 138. Let me see here.
This area here.
Yeah, so I would look for that level break and then continuation back up.
Right, okay, so you would look at like kind of this zone right over here.
That zone, and then if you keep extending it over, you'll see that I think on the 15th or 16th, there's a major wick that has rejected that area. This
over here, 16th. Yeah, okay.
So that's a major wick, and then right after that, price has been respecting this area as support for a very long time.
Yes, that is true. Yeah, because we kind of broke down on the 27th and then came back in this zone and formed support.
Right.
Same over here again, formed support again on the 8th. But then this time we came down to create resistance here. So that could have been a nice confirmation that we would have had the continuation. Is that something that you would look for? Because, you know, like you're saying, it's kind of rejected it here. But then since then, we've been respecting this area of support. So now you're looking at, okay, well, it's creating resistance here. There's a higher probability that will continue down. Is that something that...
Right. So price did break below that level, retested, and it's continuing down. And at that point, looking for that trade, I'm like, okay, well, this is where my first... target is going to be at these wick fills or even the support, and that's the same exact area where price made another opportunity of a break and retest, and it tanked right after that.
So would you consider a break and retest on the 4-hour of this support, this area here, like
so I would definitely
retest?
Yeah, so as price broke this minor support that's being formed here, I would have taken that entry, and then the stop loss would have been again I always keep it a couple of pips above support. And then once price starts tapping into my first partial level or second partial level, I'll start moving my stop loss to break even or even trail it. So at this point, this would have been a nice retest of that same move of my entry and then continuation down. And I would look for another entry as price broke this support here.
Nice. And how would you scale in, let's say, like on the smaller time frames, like your 30-minute, maybe even because I know you were saying you took it on the 15-minute. So would you have taken the entry based off the 15-minute, or would you have taken it like based off this 4-hour close?
The confirmation from the 4-hour movement down, but I would look at the 30-minute.
Okay.
So on the
Go on.
So on the 30-minute, as price pretty much, we have a support that's being formed here. Price breaks, and then the next thing I'm looking at, okay, price broke through, but it's kind of failed to continue down after this point. So what I'm waiting for is, you got that retest, price comes back down, does another retest of pretty much this level right here, continuation down, and I have my entry as price continues down here. With my stop loss, again, looking at the 4-hour, I would keep it a couple of pips above the support right there, and then continuation back down. Once this level here is broken, again, this support level after price has made another resistance, which we saw it respected a couple of times. So once and then twice here again. Once price breaks below this minor support here, this would be another scale-in opportunity. And again, you're just targeting those 4-hour wicks to the left.
Nice. Yeah, makes sense. Yeah, because I was kind of like looking at the structure based on the 4-hour last night. I was like, okay, well, as long as we stay below this area here, then price can continue down. So something that I do is, like when I come to the charts, let's say this morning, so obviously I know that we had like an area here. So we had a support, and then obviously price came down in the Asian session, broke below this area, and then kind of came back in the range. So for me to have taken a sell, like I would have wanted to have seen like a candle close below like 138,400, like a 15-minute, 30-minute candle. But then what I look at is I looked at maybe like keep the risk lower. So this entry here would have been too big of a stop loss for me. So it's like 26 pips. So I only really like to take maybe like 10 pip stop loss, 12 pips.
Yeah.
And then look to secure at like 10, 12 pips as well. So
another thing is when you're looking at even, let's say, 30-minute or the 15-minute and price is continuing your way, the way that I like to think about it is, okay, I've taken the entry, price is continuing my way. Now what level does price need to come back or retest? And then I will get my confirmation that it will continue the other way. For example, let's say you took your entry somewhere here, right? Price is continuing down, and let's say it's hit your partial level on the 4-hour time frame, and now you're looking at, okay, whether you want to trail your stop loss, because now I know that if price continues above this support that was being formed here, I know that it will continue right back into this zone. So that's one way to think about it. So do I want to trail my stop loss here? Do I want to trail it even lower? And then, or do I just want to keep it at break even? And then looking at the 15-minute, we saw that there's a little bit of this fake out before price continued right back up. Now you take a look at the 30-minute. And then on the 30-minute, it's the same exact thing, where if my entry was somewhere in this candle, I've taken the entry. Do I want to trail my stop loss below my entry, or pretty much what do I want to do? At this point, I know that there's a huge bearish just move down. I know that it'll come back at least 50% of this entire move. Let's say even somewhere here. Price is going to come back. It's going to retest that area and continue down. So for me, my thought process is I will keep my trail stop loss at this level because I want to let price come back and maybe like even make a top wick or anything like that. Pretty much let it breathe in this zone and then continue back down. But if price breaks above this area here, then there is a very high chance that it will come right back into the zone. So that way, I'm either securing partials as price starts breaking the previous 30-minute high, I'm trailing my stop loss, I'm managing my risk at that point to ensure that I get out of this trade as a winning trade here.
Yeah, nice. Yeah, see, when my positions run into profits like 10 pips, 12 pips, I'll just go break even. And then what I'll do is I'll let like maybe 20%, 10% of the position run and then just kind of see from there. But when I first started out, like what a lot of the time I would do was I would trail my stop loss on the 30-minute. But a lot of the times I'd find that positions like that would, get stopped out as well. So sometimes when I leave it at break even, I just can leave it at break even, go and, do whatever and then come back and, it's either going to have hit me out at break even or, it's going to be running nice into profit. So that's kind of what I do. But I think we got a couple of questions in the YouTube. We got, what do you think about Moderna stock?
With Moderna stock, I think all of them are pretty much, they came in right at this the perfect time. BioNTech, Moderna, I think they came in at the perfect time. But I do think that over time, their value is going to be not completely down. I'm not saying that it's going to completely drop, but it will be diminished because in the coming couple of months, we are definitely going to see a lot more vaccine companies coming out.
So, sorry, just because I've never heard of, what does it mean by Moderna stock?
So Moderna is actually one of the companies that has introduced the vaccine. So that is also one of the companies that the UK has given their orders to. I think Johnson & Johnson was also one of them. And there was also the one from Oxford, and there is, of course, the BioNTech.
Yeah, I've heard of, obviously, like Pfizer, Johnson & Johnson, but I never heard of Moderna.
Yeah.
But yeah, we got any other questions?
I think someone asked, were you ever in Capital Hungary? No. I've heard of that name. I don't know much of what they do, but no, this is pretty much something that I've learned on my own through studies, to reading, through independent research, and then just experience in the markets.
It's pretty good. It's pretty good. So you was so you do some stocks as well, right?
Yeah, so I used to trade stocks aggressively a couple of years back, but now it's pretty much I'm looking at what are some long-term investments.
Oh, nice. Yeah, I like the sound of that. Never really looked into stocks. I know like a little bit about it, obviously, but like never really looked into it because you can scalp it as well, can't you? Like same way, like
Yeah, you
as
could do
stock.
it the same exact way, but you would be surprised. But when we're looking at the 15-minute, 30-minute, for example, here, you're seeing the candles with like nice structure. But a lot of the times for a lot of the stocks, when you go down to lower time frames, you're going to see gaps. And so that's what kind of makes it harder to scalp stocks. It's more of day trading.
Ah, I see, I see.
Hmm.
Yeah. So their stocks are like good for like, long-term investments and stuff.
Yeah, that's what they're really made for. Stocks, that's what they're really made for here.
Mm-hmm. Yeah, definitely. So you trade Euro JPY as well, right? Because from a fundamental perspective, from like the Euro JPY, like I mean, I probably obviously with GBP, like obviously I live here, so I have fairly up to date with things that are going on. But maybe you could talk about the euro and how Euro JPY higher time frame, so I
Yeah.
can pull you up with the monthly and.
And so, yeah, so for Brexit, it's pretty much the same exact thing that we just talked about for GBP. Again, it's going to affect it in a negative way as well, but you're going to see GBP being a little bit more sensitive to any Brexit news than the EU here. Also, today we did have, or yesterday actually, we did have the main refinancing rate, which is the interest rate for the euro, along with the monetary policy statement. So they are maintaining the interest rates at 0%. What usually the way that market reacts to any of the fundamentals, whether it's high impact, low impact, medium impact, if your actual does not beat your previous and your forecast, or at least your forecast, then the market will perceive it in a negative way. So even if you maintain it or you drop it, it really doesn't matter, the market is going to perceive it in a negative way. With the monetary policy statements, so they are introducing a lot of programs. There's about 6 different programs. It starts off with the pandemic or the pandemic emergency program, going all the way down to liquidity programs, repos, and all that stuff. So they're actually putting in a lot more money into the economy. Let me go ahead and pull up the statement really quick here.
Mm-hmm.
But they're putting in about 500 billion euros into the pandemic emergency purchase program, and now the total is 1.85 billion. 1.85 billion. They're extending it until March 2022. So basically what that little part just tells you is they do think the effects of this pandemic will last for another 2 years.
Oh wow.
And then they go back into reinvestments of principal payments for maturing securities purchased under the PEPP, which is, again, the Pandemic Emergency Purchase Program. And that is going to be in place until at least the end of 2023. So again, for the purchase program, it's until for the next 2 years. And then for the principal payments for maturing securities that were purchased under this Pandemic Emergency Purchase Program, they're going to keep it until minimum of 2023. So what that tells you is that this program can last for a little bit longer than that, the reinvestment of principal payments. Then they go down into a little bit of more transitioning into the financial industry itself from the coronavirus pandemic. And then they end up pretty much, there's 6, 7 different points. If you just go on Forex Factory, you will see on the folder, if you click on latest release, you'll get this entire document. But you will see that they end up going all the way down to net purchases under their asset purchase program, which will continue at a monthly pace of 20 billion euros. And they will keep it as long as it's necessary to reinforce the accommodative impact of its policy rates. And then finally, they come back down to the repo facility for central banks and all temporary swap and repo lines with non-euro area central banks, and coming down into pretty much creating that liquidity for these banks, for these investment firms.
Yeah. Yeah, because at the time, it's like a few months ago, I saw like an article about the ECB were creating this like what you were talking about, the what did you call it, the protection fund, or
The pandemic purchase.
that's it. Yeah, yeah.
Yeah.
So I was reading like they basically had pumped like a lot of money into the that scheme there. But yeah, so yeah, maybe you want to talk about like the technicals and
Yeah,
on your
definitely.
JPY.
Yeah, so basically what they're doing here with all these policies is again injecting money. So by the time you get to the point of any monetary policy statement and you start reading anything related to mortgage-backed securities, repos, liquidity, operations, any of that, it's pretty much the only thing that should be clicking in your head at that point, in very layman terms, is they're pumping money into this economy. And so from a technical perspective, if you look at, let's annotate, if you look at the monthly time frame, again, support being formed and overall you're bullish, right? And if you take a look at the structure, this was an entire bearish structure that has been broken and retested at around this area or this zone, whatever you would like to call it. So this is the perfect break and retest of a structure and continuation up. It's the same exact thing as we talked about GBP, JPY, where price is currently sitting at a very strong resistance level that needs to be broken first. So if you look to the left, there was resistance, and then when finally price broke through it, we did have a wick that came back down to reject this area. Same thing here, rejection, and then price pretty much continued down after this point. And then again here you have support, resistance, and we're currently still respecting this resistance here. In order for price to continue back up, it needs to break that resistance. And again, that's what all this pumping of money or pumping in money into the economy is. That's what it's going to do. That's what the purpose is, to kind of break past this area. Any strong level where the price has rejected that level with wicks, or you have seen candles closes, or even if you have anything like this, which I think some people also call order blocks. When you see anything like that, what that represents is liquidity trap right there. And so in order to, quote, increase those liquidity operations or anything like that that they have mentioned in the monetary policy statements here, that's what this is. They need to push past this liquidity trap in order to continue back up. And so from a technical, go ahead.
Sorry, no, I was just going to say about the order blocks, but finish what you were going to say and then you can touch on that more.
Yeah, so in order to continue back up, pretty much what I would be looking for here is price breaking above this area, minimum a bottom wick here on the monthly time frame, and then a continuation back up into this area here, where again, you do see that liquidity being trapped here again at all of these levels.
Yeah. So in terms of like this order block and liquidity trap, maybe you could say what you like a little bit more in depth about what you mean by that, because I've heard of the term order block, but never really like looked into it to understand it or anything like that. So
really, order block is any of these formations here, right? The more of what we call like break and retest, that's really pretty much the same exact formation. That's where the orders are being collected. You have a huge down move, sellers, and then now you have kind of sellers tiring out. You have the buyers who come in, and then at this point, you've kind of retested a broken support. That's what we would call it here. You've retested that level, and now you're collecting some more sell orders at a higher price in order to continue down. And if you were looking for example, an uptrend and you saw some sort of an order block in an uptrend, then pretty much what that means is there's a huge move up, maybe a bullish candle, and then you see a bearish candle come down, and that just means that they're collecting buyers at a lower price for that instrument, for that asset, for that pair, whatever it may be, in order for it to continue back up. And then the buyers are pretty much buying it at a low price to continue back up. The sellers are trying to sell it at a higher price in order to continue back down.
Mm-hmm. So kind of like if we were to look at that maybe from like a yearly perspective, it'd probably be like a liquidity grab, right?
Right.
Okay, cool. And then what did you mean by the liquidity trap? Is that because we have a zone here and like because we have a lot of these rejections, or?
Yeah, so with liquidity trap, it's pretty much an area where price has consolidated, where price has wicked out a lot on higher time frames, where price has been it taps into that area but it fails to break above or below.
Mm-hmm. Okay.
And so yeah, so whenever you see this on higher time frames, for example, you have a wick right there, you have another wick that came and rejected this area, and after that you have this huge bullish move up. Same exact thing here where price came down, wicked below, and then this candle had lots of volume to the upside. Same thing here when price came back down, retested, continuation back down, lots of volume to the downside, making a support. You see a little bit of consolidation right about here, and then a huge volume again to the upside. When price taps into the same exact area again, you have that huge volume to the upside here again. Same thing here. As soon as price taps into the same exact zone, you have that huge volume to the upside.
Mm-hmm. Yeah, that makes sense. That makes sense there. Because like the way I would see it from a technical perspective is I would be focusing on like this area, and I would say like, okay, well, I can see that the monthly time frame, it had a resistance, it's like somewhere over here, and what we can see is that the monthly candles came up, this monthly candle came up and it broke above this area, and then price made a high. Now it's retracing, and then once the monthly time frame created a support, there was a higher probability for the next monthly candle to continue up to retest this high. So now I would then look at it, okay, like now we have another zone here, like this area. So once we break above this resistance, then we can say, okay, we have like another zone here to fill. And then I would just play it by like zone like that. So just keep looking for like a break above a zone, supports, and then continuations. So that's kind of how I would do it. But I think that's really good to like really zoom out and look at the bigger picture, because for me, like I wouldn't never go and be like, okay, let's stretch. Okay, this is a zone. Like, I would never do it like that. I'd always focus in on these like most recent price action, but actually like looking at it, like it's nice to like zoom out and try and really see the bigger picture. Like you can see these areas have a lot of liquidity generated. So like when we're coming back to these levels, I would then say, based off what you were saying, if we're going to break above this resistance, more than likely we're going to see some form of rejection wick to continue further up into this area, because of that liquidity that was generated for us to head up the last time. So like where you were saying we had a long wick over here to head up, we had a rejections here to push up, again over here to kind of retrace a bit. So I would say like zooming out and seeing the bigger picture, like that makes more sense for creating ideas in the near future.
Yeah, definitely. And like even when on higher time frames, for example, we have the minor areas, we have more of the recent, price action that you just talked about. But if on higher time frames, if a level has been tested over and over again and you're unable to break past it, then that tells you that there is a lots of pretty much volume or liquidity that's trapped there. That's a very strong level. And so when a strong level is broken, usually we always see lots of volume that follows it. And so that's another reason why it helps me to kind of zoom out and take a look of exactly how strong at this level is price going to continue. Am I going to expect any kind of consolidation maybe on a lower time frame around this level as price or the market is trying to generate that liquidity, generate those orders in order to break past it?
Yeah, man, 100%. But I was gonna say, I was just gonna check out GJ for a sec here, because we haven't seen what it's doing here for a minute. So it looks like it's doing a little bit of a retracement here.
Yeah, I do think it's gonna come back and it's gonna try to again. If you go back, was it the 4 hour that you just took a look at? Yeah, I think even on the 4 hour, I think this area price is gonna come back and kind of retest it, because we did just break past the strong support on the 4 hour.
Yeah, I mean, we came right down to this area, actually. I didn't even realize we dropped further.
Yeah.
We came to like 137, 300. Yeah, I was really not expecting this drop over here. But I suppose that's because I wasn't really looking at the fundamental aspects.
Yeah, and then pretty much when you put it all together, it kind of makes more sense, doesn't it?
Yeah, it does really, because like obviously there was no technical confirmation for me to take these sells other than this candle over here, but then the stop loss was going to be pretty big. So like for me, like once I see that stop loss is pretty big, I would probably wait for like this sort of structure, like something like this, like where we have like a minor resistance, so like and the next candle closes maybe like a weak bullish candle, and then as the next one's breaking the low to continue down, but it just didn't present. But then now that you spoke about the fundamentals, and like it makes sense, because clearly if there was serious fear, then we could just break out without potentially even doing a retest of this area. It seems like it retested this zone, but obviously I would be looking at this as a support because we closed back in this range. But yeah, man, 100%.
Yeah.
But yeah, so maybe you could talk about what you actually do with stocks, and if there's any stocks that you're like currently invested in or anything like, I don't know, you can.
Yeah. So with stocks, the main thing is looking at the overall economy. So if you don't have a strong economy, then of course, and your stock market is just, booming, then that it's inflated. That it's pretty much coming to that bubble burst. And so when I'm investing in stocks, I'm based in the US, so I'm really just investing in the US stocks here. But what I do is during any recession, I like to move my stocks from like these bigger individual corporations or individual stocks. I like to move them into more like index funds, or something that's a little bit of more recession proof, or even certain sectors like consumer services that are recession proof. So I like to move my stocks in those. And then as soon as you start seeing a little bit of more economic recovery, that's when I start looking into, okay, what are some sectors that will have higher growth in the short term, which will lead to higher growth later on in the future. So I go from those index funds, mutual funds, and then I'm looking at currently, for example, healthcare is going to be one of the stocks that will be booming because we're going to see a lot more stock or vaccines coming out. Right, we're going to see a lot more other healthcare companies that are going to be introducing a lot more vaccines, and so that's one of the things that I'm looking at. But after that, it would be the real estate. So again, with the real estate market is very hot out here. So there is a lot of people who are going out and again purchasing a lot of homes simply for the reason that the interest rates are low, and so they think they're able to afford it. There's usually there's the inspections and so many different fees that go along with purchasing a house, but so many people, they're skipping all of that just because they want to ensure that they're securing a purchase, they're securing a house. So they're telling the sellers that you don't need to worry about these fees, we don't want to go through all this, I'll pay you cash, right? And so let me get the house. And so they're pretty much purchasing homes like this, but they're also paying a lot over the market value. And so what that means is a lot of these people coming when the economy starts to recover a little bit, they will be unable to pay their mortgages. And so all these houses are going to come back into default. You're going to see the stock market, the real estate sector, again, dropping a little bit, making that correction, the huge bullish move that it's making up so far. You're going to see that correction. And that's pretty much when I start looking at what are some real estate investment trusts that I can start investing in. And then from there, I start going into a little bit of more of those individual stocks.
Oh, nice. That sounds pretty interesting, to be fair. Like never really dabbled into anything like that, so it's kind of like new to me to hear. So yeah, kind of it's kind of interesting. So whereabouts are you from in America? I never really asked that.
I'm from California.
Oh, nice.
Yeah.
Never. I was expecting to actually go out to Los Angeles in well, I think it was Easter, but obviously pandemic, it got cancelled and stuff. So yeah, hopefully I'm gonna be going in I think it's 2021 or 2022, first time going to the States.
Yeah, definitely. Like it's Los Angeles is a very beautiful place. I think you're really gonna like it. It's pretty laid back, it's pretty chill. It's very fun, definitely a very beautiful place. But yeah, let me know when you're out here, definitely.
Yeah, definitely, cool. But yeah, I think we was also gonna maybe try and not like tour. Obviously, we can't tour the whole country. That would be pretty big. But we wanted to try and maybe go to Miami's also. I've heard very nice.
Yeah, Miami is like pretty much what we think of like a party place.
Oh, really?
Yeah, that's where people party. But yeah, so the major areas are again just LA. You have SF coming up to the Bay Area. That's pretty beautiful here as well. And then you also have Chicago, which I think is very nice. Seattle. I think if you really want to get like there's a whole Texan feel here as well. So if you go to Texas, that's a very beautiful place. And then of course you have the East Coast, which is New York, the financial hub
Oh yeah.
of the United States.
Yeah. See, New York would be the one for me. If I was gonna, if it was up to me, I'd like to go to New York. That would be, because I've just heard it's like you feel like you're in a movie as you're walking
Oh,
through.
definitely, yeah. Yeah. Yeah.
I think we got a question here. So, examples of consumer service stocks, please. I think did you
Yeah,
give one?
what I have, I've labeled it consumer staples, but what I'm really investing in is one of the bigger, it's like a retail, it's called Costco out here. So it's like a wholesale retail kind of a store in pretty much a business where people go. So we've definitely been seeing a rise with that stock because a lot of people are going out again. When there's every time there's a fear of a lockdown, there's people always running to Costco to purchase like bulks of toilet paper, bulks of like so many different things just for the lockdown. Even though it's just like a 2 week or 4 week lockdown, they're just buying out the entire stocks for Lysol, for a hand sanitizer. So definitely, I've been seeing a lot of a huge rally in Costco. So what I'd say is any store that you go to that you see a lot of people running to them as soon as there's any market fear coming in, for example, that again a lockdown. So I'm not sure exactly what stores or what stocks these would be in the UK or in the EU, but in the United States you have CVS, you have Costco, these are pretty much the stocks that you can look up even on TradingView. If it's TradingView separates it according to the different sectors as well.
So, TradingView has got stocks for Costco. Did you say? Like from a chart perspective.
Yeah, so it has stocks for. So if you go on the main page of TradingView, and then you go to markets, and then you go to stocks.
Let me just remove this. We'll go to a fresh. Yeah, because we do have Costco over here. I have a membership actually. Do you love that store?
Okay. And then you go to markets.
Markets, yep. And
then you click on. So if you just hover over it, it says stock, and then you go to sector and industry.
Down the bottom.
All the way at the bottom.
Yep. Okay, nice.
And so here you have commercial services, you have consumer durables, consumer services even, and you just click on them, and then pretty much you're looking at the way that I look at it is if I go to this store and I've seen, like, for example, a huge line, sometimes there are a lot of people there, then there's a very high chance that whenever something happens, a lot of people will be going to these stores to pretty much stock up on anything when there's a lockdown.
So we're saying for the like immediate short term, these stocks should have like a little short term rally. Is that what you're?
Right. So as long as, like, of course, if it's something like casinos, restaurants, movies, theaters, stuff like that, obviously those are closed. So you're looking at more like what are the daily, day-to-day, where would you find your daily day-to-day things? Right. And so that's the kind of stocks that you want to be investing in. That's the very basics. That's where I tell pretty much people to start off with, like, where do you go on a daily? What kind of stuff do you use on a daily? What kind of things do you purchase that if you were to think about it, your life kind of depends on it? And what kind of stocks or what kind of companies provide most of that?
Yeah. See, I would have thought like maybe because over here, like one of our biggest supermarkets are Tesco's. So I would have thought that because obviously during the pandemic they was allowed to stay completely open, like their stock surely would have been the one to maybe like go up, increase in value. Same with like you said, like Costco as well. I suppose Costco was open because they're like a wholesaler.
Right.
But yeah.
Yeah, even if you look up Tesco, like starting off on the monthly or even the weekly, you're going to see that it's the same exact technical analysis. All you're doing is the support, resistance, supply, demand kind of stuff. But it's the same exact thing. You're looking at, okay, well, price has hit a major resistance. All it has to do is retrace a little bit or even consolidate a little bit, grab some of that liquidity and move back the other way.
Yeah. I was just gonna take a look at Tesco actually because I've never looked at Tesco. So let's see. Let's see how it moved
Yeah,
when
so
when we
if you
had the
go on the monthly,
monthly.
yeah.
Okay. So when was the pandemic was originally announced in March? Like when we went into lockdown was March. So that would have been this candle here.
Yeah, and the following one, it kind of gapped down a little bit and then it continued right back up, right? And then you have that huge move back up the following month. And then, is that when you guys started coming out of the lockdown again?
So we came out of the lockdown in June, early June, and then we went like into like a tiered system, like a like kind of like a local lockdown thing around
Right.
July, August, and then obviously we went back into lockdown in November. So we can see in November how it pushed up again.
Right.
When did
And
it
then
also
overall, even in this area, you see that price is just respecting that support, right? So it doesn't really break through, besides this one candle, which gapped down a little bit and then continued back up. And then after that, when you guys pretty much got out of the lockdown, is when price started dropping, made another low down here, and then pushed back up again. And it seems like it's pushing back above this resistance here, which was support in the past, continuing back up. So if you were looking at this, what levels would you really be targeting? So that'll be the first one, and then coming back up, you're pretty much targeting all these major minor levels up here. And also look at how many times price has wicked out at these areas too. Right, so that's also, that just tells you that, okay, that's a strong level. Price is still respecting these levels here.
Yeah. So if we look on the daily time frame, we actually like look at kind of what happened, maybe from when we first got announced. Yeah, it's a little bit hard because there's so many gaps, but it was kind of like early March. So yeah, maybe because it had this initial push start of March, and then from there it kind of retraced. A little bit difficult, to be fair, to like understand. I mean, if you look at this, these shares look a bit messy on from a chart.
Yeah, so that's one of the things that kind of makes it difficult to even scalp stocks, because again, like all these gaps, you can't really predict those gaps.
Yeah.
But that's why stocks are made for a longer term, from like 3 to 5 years to maybe 10 years, 30 years.
Yeah.
That's what the stocks are really made for.
Yeah, of course. Yeah. So I think we had a couple more questions. So someone asked, liquidity trap and grab, throw more lights, please. Yes, I think he's asking if you could shed some more light on the liquidity. But I think she explained that like fairly well. Like it's just an area where price is failing to kind of break out, right?
Yeah, it's an area where price has, on a higher time frame, it's an area where price has tapped into several times, where price has where pretty much this is what the breakdown of liquidity trap is. It's an area where price has wicked out at a lot, or consolidated, and or consolidated, created a support, created a resistance, and every time you see lots of volume following that. So that's what the liquidity trap is, because that's liquidity trap is money trapped in that area. That's what it is.
We have another question. Hi Sharma, I'm following news on Forex Factory and Financial Juice. Where do you get your news from? Thanks.
I get mine from Forex Factory, and then if there's any major political news, for example, if I'm following Brexit, legit just type in Brexit news, and then in the Google News part, or the tab, there's a tool or search tool where you can refine it to whether you want to see the past 24 hours, 1 hour, and it's going to give you the updated news. So I use a lot of different websites. Forex Factory. Stefanos told me about Forex Live. I started using that. I also have CNBC. I have Bloomberg. I have Financial Times. I have Wall Street Journal. So all of these different all these different websites can give you that information. And for some of them, I know that once you click on it, it says pay or subscribe or anything like that. But if you have them on Twitter, it's the same exact news that they're releasing as articles. You're going to see the same exact news on their Twitter feed as well.
Yeah, that's yeah. So sorry, just seeing if we had any more questions, but there wasn't any. I was just gonna say, GJ, once this 15-minute candle closed bearish, I think it was if I was trading today, I would have been in sales right now for price to retest the low. That's another thing I kind of do, is because a lot of times price is just gonna break out and doesn't really give me an entry. So one of the things I do is I wait for price to like make a low, and then if it can retrace and create some resistance, there's like a 80% chance it's going to retest that low. So obviously your idea of the pullback can work. So what it may happen is it's going to retest this low, we're going to consolidate here, and then like pre-New York it's making a retrace up, and then MY session create resistance to continue down. But yeah, I mean, have to see if it can do that. But yeah, if I was in sales, I would have taken sales right over here. I think it looks good. Let's look on the 5-minute. Yeah, have to see. Sorry, someone just wanted to. Can you look at gold? Let's just check out gold, because I know that we had. Ooh, look at gold. Yeah, see, this is where gold just becomes so difficult. Because I was waiting for price to break the support. So you see how this 30-minute candle came all the way up, tapped into this area, and then closed below. So price kind of really didn't really go anywhere, to be honest. Yeah, it was been very difficult to like execute sales, maybe like somewhere over here, but only moved like 10 pips, maybe like 13 pips, and then closed back in the range. So actually, I think a good buy would have been once the 15-minute candle closed back above this area, because then we had a clean candle to the left and we had a range to fill. I mean, if you look on the 30-minute also, it makes no sense if we're going to break the previous high and then 15-minute candle is going to close back in this range, then we have a wick to fill up over here based on the 30-minute time frame. So yeah, I think gold is kind of playing around here. Let's look on the 4-hour, because we was expecting this 4-hour support to potentially break, but looking at the 4-hour candle now, it's like flipping bullish, but it's just kind of ranging. This is just consolidation, because we had this consolidation here beforehand. So I think for gold, to be completely honest, the best thing to do is to wait for like a breakout of this consolidation, because if this was the resistance and then let's say this is the support, right, we had consolidated here for a while beforehand. So you would want to wait to see if the 4-hour can either break up again, or it's going to continue down once it breaks this level. But to be honest with you, I think it's going to more likely break down, just because we broke up out of this range again on the 4-hour time frame, and then as you can see, we closed back in the range. So there's a higher probability at that point that we can break the support, but it seems like it's just consolidating. So I'm thinking maybe like pre-New York, when we have more volume coming in, that we can break this level at 1830, and then we have like a support down over here that we can reach 1825, and then eventually we can continue down to like 1815. That's going to be the play there based on the 4-hour for sales. But Sharma, do you look at gold at all, or?
Yeah, I do. I just haven't traded it lately because I'm looking for like some cleaner breaks and retest on the higher time frames.
Yeah.
But exactly what you're saying, I was just looking at even the 2-hour. I would want to see minimum. I want to see the 1840 level break, in order for price to continue back up. Or even if you look at the 1-hour, same exact thing. I want that 1840 level to break and then continue back up. To that 1850 area, almost the 1847, 1850 area.
Yeah,
for those buys, those clean buys.
Yeah, because you have a clean candle to left hand side, and I suppose if even better if we can like create some support for price to continue further up as well, because I think this was like an area around 1842 where we had a resistance, and then price tried to form support, to continue further, but it failed to do so.
I think at the 1840 level, even on the hourly, if you go back a little bit, I think it's the start of December, you're going to see consolidation right at that level. There you go.
Yeah.
So once that's broken, continuation back up to that 1849, 1850 area, I think those are nice buys. Below 1830, I think sells coming down to almost 1850 or 1810.
So just as an example, you see this structure right over here on gold. If I just highlight it for people, would you say this is a good example of, would you say an order block?
Yes. Well, order block specifically would be
Higher time frame.
no, so it would be specifically like this right here.
Oh, because it engulfed this support.
Yeah.
Ah, I see, I see. So this is just more of like a pullback and then
Pull
liquidity.
back and continuation down.
Yeah,
But
okay.
this does look like this may look like an order block maybe on the 2 hour or even on yeah, about I think about 2 hour it could look like that. So that's an example. And then when you also have, I know some people call let me go back actually here. I know some people call like this kind of a formation here as an order block too.
What, because price broke out of resistance and then we closed back
Right,
in
like
the,
a
like a fake
breakout
out?
at a level. Yeah.
Yeah, okay, okay.
Yeah.
Yeah. Oh, nice. We've got a question here. So, would like to hear your thoughts on digital currencies going forward and central bank involvement.
So with digital currencies, with cryptocurrencies, I think that overall it's an immature space currently in the sense that it's a very new asset class. There isn't much data on it. I think the furthest back you could go is probably 2009, and that would probably be Bitcoin. But other than that, I think it's a very new space. There isn't enough data points to even use the supply and demand that we do use here for other currencies and commodities. And so, with that sense, we are seeing a lot of people. It's catching the attention of a lot of people. Definitely, a lot of the institutional investors that are coming in as well to kind of take advantage of this new space. But I do think that in the future, in the next coming years, there will be some kind of a delineation. There will be a lot more data points that can be used in order for traders to take the same exact approach that we currently have. But right now, all I'm saying, what I would say, like a suggestion, is if you're not comfortable with these currencies or even commodities, I don't think cryptocurrency should be the move just yet. I think a trader needs to be more comfortable with other asset classes like commodities or currencies or even stocks before even getting into a very new asset class such as cryptocurrencies. But I think in the future, currently we are even seeing a lot of governments who are adopting cryptocurrencies. Not per se, they're not adopting, for example, Bitcoin. They're trying to come up with their own. Like you're saying, USD coin. There was news about Bank of England pairing up with XRP Ripple. And so we are definitely seeing central banks. It has caught their attention. But again, any currency for a central bank or a government to adopt it, they need to be able to handle the supply and demand of it, right? Like currently you see in these monetary policy statements where they're injecting money, euro, dollars, whatever it may be, into the economy. If you have a decentralized asset such as cryptocurrency and you're not able to do that as a government, you're kind of losing control. So that's what that means.
Mm-hmm. Yeah, see, I think like with the whole cryptocurrency and things like that, like it seems to be coming. See, I don't know a lot about it. Like, I'll be completely honest. I know if someone's to ask me about Bitcoin or anything like that, I know hardly anything about it. But the only thing that I can say is that, considering that, don't you think it's like amazing? Like, people can just almost create a currency out of like thin air and just say that this is a cryptocurrency, right? Because obviously with all the other currencies that we've had, and ever since we've ever used like gold as a means of like payment and things like that. These are obviously physical, what's deemed to be like valued goods essentially, and with obviously currencies, it was just a way of deriving that value into like a note. But it's crazy to think now we're living in a world where we can create the same aspect but from like a digital perspective. I find it quite like fascinating, but I mean I like to see where what happens kind of with these bitcoins and things like that over the next few years.
Yeah, well, if you look at the history of money, like, it started off with grains, right? And then it was gold, there was silver, there was all these different what they used to call money
Mm-hmm.
back in the days, right? And then when the dollar was introduced, I'm pretty sure like there were people who felt the same exact way and like what you just expressed, that it's crazy that you can just come out with a bill, like a rectangle paper,
Mm.
and just call that currency,
Mm.
right? Which was backed by gold, right? That
Yeah.
you could go in and then you could exchange this certificate, this bill for gold. And pretty much now we're at the point where you walk into the bank, you're not going to say, like, give me gold that's worth a pound or a euro or a dollar. They're just going to look at you crazy.
Mm-hmm.
And so, for any currency, basically what that tells you, the history tells you, is for any currency to be accepted by the government, by the society, it needs to be backed by what is currently accepted as a form of payment or a form of currency.
Mm-hmm.
And so back in the days when the dollar was introduced, when these certificates were introduced, where they were saying that you could walk into the bank and you can say, I want to exchange this for gold, that certificate was backed by gold. And that's why people had trust in it. And
Yeah.
over time, they started just taking that little gold aspect out of the picture, where you can walk into a bank and say, like, I want gold for this much dollar or this much pound or this much euro. They started taking that aspect out, because now you don't go to the bank to ask something like that. You just simply have the trust in that currency. And so for any currency to be at that point is definitely going to take a lot of time. So I don't think cryptocurrency is going to get to that point in the next 5 to 10 years. I think it's going to take a little bit longer than that.
Mm-hmm. Yeah, and it seems like every month or every few months there seems to be like a new like version of this coin that comes out, and it's incredible. Like obviously on social media and stuff, always that are popping up, and people are, follow me, and always these like crypto guys, and they're like, oh,
Yeah.
this new version of cryptocurrency. I'm just like, look, man, I don't know nothing about it, and I'm not really interested. But yeah.
Well, that's what you got to think about, because for Bitcoin itself, like, think about how many years it took for people to even, actually start investing in Bitcoin. Like, when it first came out, people were just thinking it's crazy. Like,
Mm-hmm.
it's just, no one's really paying attention to it. But it hung around for so many years, since like 2009. And now finally in like 2019, 2020, maybe even 26, as early as 2016, is when it really caught the attention of serious investors and traders.
Yeah.
That's when people actually started going in and like started purchasing Bitcoin, started holding on to it,
Mm-hmm.
actually trading it. And so no matter like how many new cryptocurrencies you come out with, the main thing is, are you able to grab serious attention of investors?
Mm-hmm. Yeah. Yeah, it's all a bit I don't know, the whole crypto thing is, I think it's, for me it's a little bit like confusing, but I don't know, some people, I know that with obviously Bitcoin, like I know I was seeing like Raja put on there like this is the time all the crypto scams are back, because
Yeah.
Bitcoin's moving bullish, but yeah, it's just mad.
Yeah, you're gonna see a lot. I actually have a lot of people who've messaged me in the past, like ever since quarantine started, who have messaged me saying like, "Hey, this person messaged me and they're asking, or they're saying that my money can be doubled, tripled in crypto. I should be investing in this new crypto that just came out." And I'm like, why are you really even trusting a random person
Hmm.
without any credibility?
Yeah. I think as well, anybody that's going to approach you and say, oh, invest this and you can double your money, like you do always have to, the first question you have to ask yourself is, why aren't they using their own money? Why are they
It's
coming to
not,
me?
but
What are they
yeah.
getting out of it?
Or like, where did they even find you?
Yeah. Yeah, like,
That's another thing.
yeah, like I'm sure they've got some friends, if I had an investment opportunity and I was like, man, we could invest in this crypto, and I was like serious about it, and I was like, I don't know, we could make 3-4 to 1 big returns from like if we hold it for a few months or whatever. Like it would be crazy to think that I wouldn't go to like random people and approach that. I would say, oh well, I know someone who's got a bit of money, I know it's a safe bet, I might speak to them in private about an investment that we could do, but anybody that's gonna message you randomly to try and say, oh yeah, you can make this, you make that, man, just block them straight off the bat.
Yeah.
You know, they're not going to be legit ever. If they're going to approach you to have to ask you to invest in them, like, they're not legit. Anybody who's a good investor, you know, people go to them. You know, that's how it should work anyway. But I think we got some few questions here. I'm not really came through a bit quick. I think the
I
Streamlab's a bit
think,
laggy.
yeah, so someone's asking the opinion and experience how retail trader friendly is January as a trading month. So with December and January, what you want to watch out for is, again, the latter part of December. So as you get closer to Christmas, I'm not sure if you've heard of it, Harrison, but it's more of Santa Claus rally. It's a stock term, but you start seeing that in Forex, and we're seeing it currently too. But I did make a post about this on my Instagram. It's pretty detailed if anyone's interested. But in the second part of January is when you're going to start seeing everything kind of normalize and come back to normal. You're going to see this little bit of volatility, extreme volatility and low liquidity dying down. You're going to see a little bit of more balance in there, because that's when you're going to see a lot of the institutional traders coming back and actually being active in this foreign exchange market.
Mm-hmm. Would you say that with like the new year that there could be like new year optimism as well? Like that's something that like last year, something I saw in the like early part of the year, like prices moving a little like slightly more bullish. So I was wondering if there's like this idea that, you know, with a new year, that there's like new investment decisions, you know, so it's a little bit more optimistic to start with. I don't know what you think about that.
Yeah, so that's what the entire the rally is about. So that's the whole Christmas, first of all, optimism leading into New Year's. So what a lot of people, from a stocks perspective, and you could apply the same exact thing to Forex, from a stocks perspective, the Santa Claus rally is just every single year people thinking that I'm investing, for example, Amazon. A lot of people are using Amazon to purchase a lot of products. And so what they think is, oh, I'm purchasing so much. There's so many people who are going to be purchasing, for example, Christmas gifts from Amazon. So that means that in the next earnings report, or, you know, whenever their statements come out, that means that Amazon is going to disclose that they made a lot of money. That's not necessarily true. So they're expecting that the stock is going to keep rising. There's going to be maybe a better earnings per share, all of that stuff. And then really this entire rally that you're seeing in the stock market is purely because of retail investors. It has nothing to do with the company itself. The management hasn't changed. It's the same exact thing. There hasn't been any major changes to the company itself. So there's like no major investors who came in. It's purely the retail investors who came in. They were thinking that just because I'm investing in it, a lot of people are going to be buying from Amazon, for example, then the stock is going to continue up. It's that optimism. And then leading into the New Year's, they think, okay, the new year has begun. And so this is a completely new year, new fiscal quarter and all this stuff for this company. And so they're going to come out with pretty strong numbers. That's not necessarily true. And you see that happen every single year.
Mm-hmm. Yeah. I think we got, do you think GJ will go back to normal after this year and the Brexit deal finally over with?
I think they're still going to be dragging out this Brexit deal in one way or another, but I do think there's going to be some sort of normal for GJ. Just the fact that they're pushing past this deadline of December 31st.
Because I know that I was reading like the other week that like for us, for the UK, like it's going to be fairly easy to like with a deal we just vote in Parliament and that's it. But with the European Union, like they have a number of steps to go through that, and a number of votes for their side of their end or the deal in general to get passed through. So I think like they're gonna make out to the people they've come to terms, they've come to a deal, but like really behind the scenes it's gonna be months and months more left for them to like really make that happen.
Absolutely, because even the EU and the past couple of days, even the EU started proposing like, hey, how about we continue these talks after December 31st? And the UK said absolutely not.
Yeah.
And so that was one of the things. And so they were even expecting or, you know, proposing that how about we just continue the talks until keep the next deadline maybe December 31st, 2021. And the UK said no.
Yeah, man, they would, wouldn't they? Literally. It'll just be like 2025 or something. There's still just it'll probably get to the point where the EU are probably trying to keep pushing the deadline back, so like the UK just say, you know what, we're just not gonna leave. It's just so much more aggro. That's probably what they're hoping, to be honest.
Yeah, well, that's one of the things where it's like, first of all, the UK and EU, they're each other's biggest trading partners. If your number one trading partner was leaving and they were saying that, yo, I don't really want to be a part of, whatever you have going on here, you're going to start to think about like, okay, how can I get this person back? How can I get this person back on my team?
Oh, yeah.
And so that's pretty much what's going on. And then that's also one of the issues where the UK or the EU was telling the UK that we don't really trust whatever happened after the internal market bill, where some of the clauses in the internal market bill were violating the withdrawal agreement. And so they're like, we want to be able to have a say in your justice system if something goes wrong and we think that you're violating any of the terms that we talked about. And the UK pretty much turned around and said, that's crazy, and no, that's not going to happen.
Yeah, man. Got another question here. What would your take on the mounting debt burden in most of these modern economies?
I don't really have a take on any of them because you're going to see a lot of these mounting debts on almost every economy, and it's just not the strong economies that we have. It's also on the developing economies as well. Mm-hmm. And so that's pretty much, every central bank has incurred some form of large debt, and that's pretty much how they're operating. But other than that, I don't really have much of an opinion on them. But
yeah,
I mean, you could definitely read up, and I could definitely give out some resources. I can post it on my story. I'll tell Harrison if he's comfortable, then he can post it on his story. You can definitely read up. It's interesting, but you see whatever happens with this modern economy and debt. You're seeing it happen through the stock market. You're seeing it happen through the foreign exchange market. You're seeing it happening with the inflation of currencies and the economy overall. You're seeing all that come together. So it's pretty picture clear, but other than that, I don't have much on that either.
Yeah, I think with the debt, obviously there has to be a point where, obviously it reaches a point where it's too much. Like obviously for the UK, like the debt now is just ridiculous. Obviously the US I think they're the highest in debt, aren't they? The US?
They are, and then the thing is, as a central bank, all you're doing is just creating more money supply.
Yeah.
And again, it's just supply and demand.
Yeah.
You're in more debt, just create more money.
Mm-hmm. Yeah, looks like those. So when I said about the 15-minute candle for price to continue down, looks like that sell didn't play out. So the next 15-minute candle closed bullish, but it seems like now price is now coming down to retest that low and continue.
This is actually breaking the 30-minute break and retest that it just did.
Yeah.
And yeah, it's coming back down. I think it's going to come back down to fill that wick at the 137.350 area.
Yeah, because even if you look on the 1 hour, the 1 hour is closing bearish at this point. See, what I was expecting was maybe this 1 hour to close like a weak bullish. And then something I look for when we see like a weak bullish candle, sometimes, the next candle is going to wick up and then break that low and then continue with the trend. But I think if this 30-minute candle closes below this area, it paves way, like Sharma was just saying, for the next 30-minute to also continue down. So it's like a 22 pip range to fill that wick. But then you're looking at stops are going to be pretty big. But I'm not trading today. I'm just like speculating here.
Yeah, even with the major top wick on the hourly, so that's another confirmation. When you have a major rejection like that and then the candle flips bearish, usually the thing is that price will continue down. Sometimes you'll even see price breaking the previous supports and just continuing down after that, creating its own little support.
Mm-hmm. Yeah. Have we got anything else? Did you answer the one where it says, in your opinion and experience, how retail trader friendly is January as a trader month? I think you spoke about that.
So it's the second half of January that everything will start to become a little bit more normal. And specifically in foreign exchange market, we often see these the Santa Claus rally right after Thanksgiving, because that's when a lot of the market optimism starts to come in. But in the stock market, you see it happen about the last 5 days of December. Again, right after Christmas, everyone's done their Christmas shopping. The mentality comes in that, okay, well, if I'm buying, a lot of people bought a lot of stuff for Christmas off of Amazon, for example, the stocks are going to continue up. That's when that mentality starts to kick in. And then it'll go right out the window in the first 2 trading days of January.
And then what's your take on the whole trading space now that we have the reserved Joe Biden instead of Trump? How will that affect trading 2021 onwards?
Would it be specifically for the US dollar that they're asking?
I don't really know, but I mean, I would just say, like, in answer to that, like, just straight off the bat, I think obviously Trump has been very, like, pro stock market. So I would say that probably going to see more of an effect with the stock market. I think probably gold as well is going to maybe be a little bit more volatile. Not really sure, but I would say that, like, pairs like obviously GBP and probably not going to have that much of an impact.
Yeah, I think it's going to start off with the stock market first, because the way that, again, Trump was approaching the stock market, exactly what you said, he was more about the stock market, was that he was inflating the stock market instead of putting money into the economy. And again, without a strong economy, you cannot have a very sustainable stock market that keeps going up, right? So with Biden coming in, I think what he's going to do instead is do the opposite, where he's putting more money into the economy instead of the stock market. When you have a strong economy, your stock market will go up. And, you know, I'm not saying like it's going to completely just start like breaking all these resistance and like stuff like that, but it's going to be it's going to be stronger. It's going to be more sustainable. It'll be a healthier stock market because you have a healthy economy, which is going to back it up.
Yeah. Looks like GJ sales are playing out here too. Just pushed down another like 16, 17 pips.
Yeah, I think it just hit that 350 area.
Yeah. See, the thing for me as well is I'd like to see how obviously the US economy will do under Joe Biden. Because obviously, like, in terms of what Trump's done, I mean, he's obviously, you know, created a lot of jobs and, you know, like that type of thing. So that kind of like sector of industry in the US, I think, was like majorly impacted by his presidency. So I'll see, obviously, if like Joe Biden kind of has that same enthusiasm towards, like, you know, the integrity of like US jobs and things like that. So we'll have to kind of see, because I think that will also have a, like you were saying obviously earlier with the consumer, because it all interlinks, doesn't it? Because obviously when more people are working, you know, unemployment's going down, that's obviously more people are spending, and that obviously contributes to the whole stimulation of the economy. So I think we have to see kind of what happens.
I think not like, obviously I don't get like too political with this stuff,
Yeah,
but
neither do I.
I think I think looking at data, looking at, you know, how much time does actually implementing something and then watching the effects of it takes. I think when a lot of people say that Trump created jobs, I think it's the momentum that carried over from the previous administration that continued this job creation, because they obviously were able to, when they were leaving the office, they were able to implement a lot of the stuff. And then, of course, when Trump came in, he was still transitioning into those things, right? Obviously, he didn't come in and just completely just say, this is wrong, we're not doing this, throw this out the window. Obviously, he had to comply with a lot of things that were already in place and then slowly making those changes. I think it was the momentum.
Yeah.
And I think whatever the momentum from this administration is, we're going to see that into the next administration for at least the first 2 years.
Yeah. Yeah, we'll just have to see how it plays out, I suppose. But as I reckon we'll have some volatile NFP months for sure.
Definitely, yeah.
But yeah, let's look at gold. It looks like gold did continue moving bullish. I think it's heading up to that 140 level that we were talking about. Because looking
at that 38 level, yeah.
Yeah, because looking on the 15-minute time frame, so obviously we spoke about the fact that, you know, the 15-minute candle closed back above this area, and then we had a weak 15-minute candle close over here. So I think a really good buy would have been like an impulse entry of a break of the high over here, and then I think originally could have kept stop below that candle, and then as it pushed into profits, you know, bring the stop loss above the current candle. So let's just measure this candle over here. Yeah, that ran for like 20 pips. Stop would have been like 20, and then reduce it to like maybe 6-8 pips. But yeah, it's pretty good. Okay, so I was gonna say the stream probably gonna end in like 30 minutes time, probably like 20 minutes time. So probably gonna wrap it up there, Sharma, if that's okay.
Yeah, definitely.
But yeah, thank you so much for coming on. Really, really enjoyed having you on. Definitely get you on again. I know a couple of the guys in the YouTube there was singing your praises, saying that they find you very clear to understand and that you're good with your explanation. So yeah, we'll definitely get you on again.
Yeah, absolutely. Just
another time.
again, let me know whenever.
Yeah, sure. Probably get you on after the new year.
Yes, definitely.
We'll see. We'll get your outlook on the new year and fundamentals for the new year. So I think that would be good to get you on in January.
Yeah, absolutely. Yeah, just let me know whenever.
Mm-hmm.
Someone just asked, recommend any books for understanding financial and economic fundamentals. I've read a lot of articles instead of many books. And so if you want to understand more of the economy and the finance and fundamentals overall, there is a couple of articles. One of them, my favorite one, if specifically for Forex, it's called Market Setup in Advance. And it's by Robin L. Lumsdaine. So if you just look that up itself, it's called Market Setup in Advance of Federal Reserve Policy Decisions. You'll be able to find that.
Would you say it's called Market Setup?
Yeah, Market Setup in Advance of Federal Reserve Policy Decisions.
See if it comes up when I do that. There is that one. It Federal Reserve Policy Decisions. Okay.
Yeah, so if you just click on that, you should be able to download this. It's on a couple of different sites, but yeah, so that's one. And then there's, if you're looking more at the stock market, then it's called Wall Street versus Main Street, and again, it's by the same exact person.
Yeah, I'm just putting these up on the internet for maybe people who. Yeah, there we go. This it here.
I would say Wall Street versus Main Street, Robin L. Lumsdaine.
Oh, Main Street. Sorry, I put Main Street. Robin. Oh, Robin. Sorry if we said Robert. Oh, we said
Lumsdaine. Lumsda.
SDA.
There you go. The second one.
Oh, there's a. Dane. Sorry.
Yeah.
My spelling is not the best. Is it this one?
There you go.
There you go.
Yep.
Yeah, we got it. Okay, cool. So yeah, you got them two books there.
And then
recommended.
For more of like the risk management purposes, this one's exactly posted by the Federal Reserve, and this is called Overview of Risk Management in Trading Activities.
Okay. Yeah, nice. Looking at GJ over here.
Oh yeah, of course. But yeah, I would definitely read more up on Robin L. Lumsdaine. She was actually one of my mentors. I actually watched and read a lot of her stuff, and then eventually we got to the point where I was able to contact her, and then she became my mentor. But she has fantastic articles that you can learn from.
Nice. That's that's pretty good. Okay. So anyway, yeah, thanks very much for coming on. We'll definitely get you on again after the new year. What's your Instagram? Quickly, if you want to put it in the YouTube chat, if anyone wants to ask you any questions or get in touch. I did put it. I think I put your like kind of trading name there in the bottom left. But just in case someone's struggling to find you, you can put it in the chat there. And yeah, if anyone's got any questions, they can get in touch.
Absolutely, yeah. Just feel free to message me, guys, with any questions that you may have, guys, girls, and I'll definitely get back to you. But yeah, my Instagram is SharmaFX.
Cool. Oh, just SharmaFX, yeah?
Yeah.
Okay, perfect. All right then. Well, thank you very much for coming on. yeah, enjoy your weekend. And
You as well. And thank you for having me, and thank you for everyone who joined.
yeah, no problem. I'll see you. Yeah, we'll be in touch.
Absolutely, yeah. Just let me know when, and I'd be more than happy to come back on here.
Perfect. See you then.
See ya.
See
Bye
you.
bye.
Bye. Yeah. Yeah, it was some interesting stuff there. Do always like getting another perspective. And she was the first guest of the live stream, so pretty good. We'll have to see. We'll have to see who we get on next week. Okay, so yeah, it looks like those GJ sells did play out. I mean, the stop would have been very big for a sell on the 30-minute, but it really did make sense. Obviously, the candles are slightly larger, so like it's very difficult to kind of execute on that. But I mean, yeah, it's a Friday here today, so I was just always gonna speculate today. Yeah, I think that was really good. She broke some things down really nice there. I mean, fundamental aspects, technicals lining up. Yeah, pretty good. Hope you guys enjoyed that. Yeah, I've saved 2 of the books here. So if anybody wanted to know which one it is, I'll just pull it up on the screen here, and you can take a photo, take a screenshot, whatever, and come back to it. Right. Anyway, I'm gonna go make a drink because I haven't had a drink all morning. So yeah, I'll be back in a minute. Yeah, give me 5 minutes, guys. I'll be back, and then we'll round the stream off in a little while here. The only thing I would say is that EJ sells actually did play out very nice. I think a good sell would have been the break of this low over here for price to continue down. In fact, that would have been the best sell possible. Let's look at the 15-minute. Yeah, I think the 30-minute time frame over there. See, we create a resistance here on the 15-minute time frame, but it kind of retraced. But I think this area would have been a really good sell opportunity. Fundamentals with technicals improve trading. Yeah, I think obviously you can do just as good like just trading technicals, but having fundamentals like in the back of your mind or just understanding it is not going to do you any harm. I think if anything, like you can kind of expect sometimes when these technical breakouts are going to happen based on the fundamentals as well. So yeah, it's good to get some different perspective. 100%. So yeah, I'll be back in like 5 minutes, guys. going on, guys? Ooh, looks like GJ can continue bearish. Yeah, so I think at this point, I know it's Friday, but I think I'm going to call it a day here today, guys. So yeah. So everyone in the Zoom, thank you very much for coming along. We'll see you on Monday. Everyone in the YouTube, again, thank you very much. Hope you have a good weekend. We'll see you on Monday, normal time. Hopefully we'll know if we have any Brexit updates over the weekend, and we'll have to deal with that on Monday. So yeah, anyway guys, thanks very much, and I'll see you all next week.